Hello friends and welcome to Varical's Learning Vlogs. This is CA Prince George and today we are going to discuss chapter 12 which provides for rates of income tax for various sources of income depending on the residential status and the type of person. In this video we are going to only talk about resident individuals in the various scenarios that I will be presenting in my presentation. And I'll be dealing with three core issues and confusions that the tax professional fraternity I have realized is facing in computation of total income or computation of tax. The first issue is with respect to the allowability of the basic exemption limit of 2,50,000 and 3 lakh in case where the assessee's income comprises of either only capital gains or capital gains clubbed with other sources of income. And what will be the allowability of chapter 6A deduction and rebate under 87A in similar situations. So these are the three questions that I will be dealing with. Before I present my slides, let me also give a caveat that these are going to be my personal opinions and should not be taken by anybody to compute their tax liability unless you are a tax professional. And as I said, this is my personal opinion. There are situations wherein the department is taking a contrary opinion, and many other professionals might also take a contrary stand on these issues. However, having said that, I would be backing my opinion with specific wordings in the in relevant sections, which I will be sharing with you during the course of my presentation. So it is not going to be a unfounded figment of my imagination. It will be very much backed by the provisions of the law. So with that caveat, let me start the presentation. So as I said, it is going to be for resident individuals and for financial year 24-25, which is for which will be in couple of months filing the returns. So there are 5 specific sections which we will be dealing with in this presentation, and my entire argument would be an interplay of between these sections. So it's important for you to note down these sections. The first section is section 87A, which is rebate. Then you have section 111A, which provides for rates of tax in case of short-term capital gain of certain capital assets. Then section 112 that provides for rates of tax in case of long-term capital gain in general. Then 112A, which provides for rates of tax in case of long-term capital gain in case of certain long-term capital gain. Then section 115 BAC, subsection 1 and subsection 1A, which is also popularly called as the old tax regime and the new tax regime. So these are the 5 sections that you must be ready with in your VAR Act if you want to follow what I am going to present. Though I have put these sections in the slides as well. These are the screenshots of the relevant sections, and I will be substantiating, I'll be switching very often during my presentation to these sections to pinpoint the specific words and specific provisions under these sections. Let me start the presentation with this slide, which is nothing but the tax slab in case of old tax regime and new tax regime. You already know this. You will find this in the internet. For the purpose of this presentation, you just remember the first exemption limit, which is 2,50,000 and 3 lakh in case of new tax regime. Now, this limit of, which is also called as the basic exemption limit, is irrespective of the type of income, whether you earn capital gains or salary or house property or all of them put together. This limit is allowed. This basic exemption limit is allowed in all cases. If there are any exceptions, we'll see to it in the due course. The first scenario where you only have income from salary. In both case, new and old regime, it is 7 lakhs. You have standard deduction of 50,000 and 75,000. I am not discussing this in any detail because it is not disputed. Income from salary. Then you have ATC deduction, which is allowed in case of old regime, which is not allowed in case of new regime. So let us see, while we know it is not allowed in case of new regime, let us see what the wordings of new regime of 115 BAC subsection 2 says. 115 BAC subsection 2. It says, for the purpose of subsection 1A, the total income of the person referred to therein shall be computed without any exemption and deduction. And then it lists down a series of exemptions and deductions, which also includes chapter 6A deductions. And thus, we have not considered chapter 6A deduction here. Total income is calculated. Then based on normal tax slab, the tax liability is 12,500 and 16,250. Now comes the rebate. This is another issue. Rebate under 87A, the section says that this rebate is provided for tax liability which is calculated on the total income of the assessee. Now this total income means a sum total of income from all the heads. Salary, business, capital gains. It is not providing for this rebate for any specific head of income. Neither is it giving any disallowance in case of any specific head of income. So that's the reason why it is allowed in old regime as well as new regime. Now in case of new regime, it is also the deductions allowed, not allowed are also governed by section 115 BAC subsection 2, which we just read. Now that subsection specifically provides certain exemptions and deductions which are not allowed in case of new regime. Like we just saw, chapter 6A deduction is not allowed. Similarly, there are few deductions under section 10 which are not allowed. The interest under section 24 is not allowed. Certain set-offs are not allowed of losses. Certain depreciations are not allowed. So anything which is disallowed or which the legislature wanted to disallow in case of new tax regime has been provided there. If it is not provided there, then it should be provided in the specific section that the item is dealing with. Here it is 87A. 87A also doesn't provide for it. That's the reason why in new tax regime it is considered. Right. Let's take another example again with salary, but higher salary, 10 lakhs. I will straight away jump to chapter 6A deduction. In case of old regime, it is allowed. I have taken 2 lakhs because it is ATC plus others also. In new regime, it is not allowed. We just saw it is explicitly not allowed there. You calculate tax as per the normal tax rate. 87A rebate is not allowed in both cases because 87A rebate is allowed only when in old tax regime you have income up to 5 lakhs, and in case of new tax regime you have income up to total income up to 7 lakhs. Here total income in old tax regime is exceeding 5 lakh, in new tax regime it is exceeding 7 lakhs, and that's the reason why it is not allowed. So with this, adding the surcharge, the tax liability comes to 65 and 44,200. There is no more further confusion here. Now this one is important, and this is where the whole contention starts. What if you have only short-term capital gains from equity shares? Now there is only one section in the entire act which deals with the rates to be applied for short-term capital gains, which is 111A. Now 111A also provides rates with respect to just 3 types of capital assets. One is equity share, the other is equity linked mutual fund, the third is units of business trust. Other than this, if there is any transfer of other capital asset and if it is a short-term capital gain, there is no provision in the act which deals with the rates to be applied in that case. So naturally the rates that will be applied will be the normal slab rate here, right? So with that background, let me start. Short-term capital gain from sale of equity share and equity mutual fund is 5 lakh. It is after 23rd of July 2024. The relevance of this date is, if it is before this, it will be 15%. After this, it is 20%. Chapter 6A, deduction whether allowed. Well, it is not allowed. Specifically, it is not allowed in case of short-term capital gain under section 111A. Now let's read the language of 111A. What does it say? It says subsection 2, where the gross total income of an assessee includes any short-term capital gains referred to in subsection 1, the deduction under chapter 6A shall be allowed from the gross total income as reduced by such capital gains. So it will be allowed only from the total income which remains after reduction of the short-term capital gain. This means if there is only short-term capital gain, it is not allowed. Right? And that's the reason why we have considered no deduction in both cases. In new tax regime, we anyways read that it is specifically disallowed. Total income. Now the question is about the basic exemption limit. Now again, where does this basic exemption limit comes from? This basic exemption limit comes from the tax slab that we saw, which is provided for under section 115 BAC1 and 115 BAC subsection 1. These are the two subsections which provides for those tax slabs, and those tax slabs are not for any specific head of income. It is for the total income. Neither in the tax slab there is a mention of any head of income being disallowed. So this means this tax slab is allowed for all the heads of income unless there is a specific provision in any other section which disallows it. To my understanding, there is none. Tax will be applied at the rate of 20%. Now, another bone of contention whether the rebate under 87A will be allowed. Again, let's take the old regime first. Old regime, as far as 87A is concerned, we saw that there is a specific mention of total income there, and total income means income from all the heads, and there is no exception also given in 87A exclusion. Similarly, there is no such exclusions which are given in 115 BAC, subsection 1. Now let us see if there is any specific exclusion under section 111A or not. Now we will see that, but in 111A also there is none. So that's why in old tax regime 87A will apply. The rebate can be taken. Now let's come to the new tax regime. New tax regime is governed by 115 BAC, subsection 1A, and subsection 2 of the same sections provides for all the deductions or exemptions which are disallowed in case it falls under the new tax regime. And there is no mention of 87A. So in new tax regime, it is allowed in that section. Now, in both the cases, let us see what does 101A says. Is there any specific provision in 101A? Well, you can read the whole thing. I have found only the mention of the basic exemption limit here and the mention of chapter A deduction. There is no mention anywhere of rebate under 87A. It doesn't mention it is allowed, doesn't mention it is disallowed. So that means it is allowed. Because if the objective was to disallow, then the way they have specifically mentioned about chapter 6A, they would have mentioned about section 87A as well. So intention of the legislature was never to disallow. Though the stand that the department has of late taken is in case of special rates where special rate of income tax is applicable, deduction the rebate in the new tax regime will not be allowed. Now, if that logic has to be applied, it should be applied ideally in the old regime also. Anyways, as I said, I have just substantiated my point of view with specific wordings of the statute, of the relevant provision of the statute, where there is no disallowance. So the entire 25,000 is allowed here. Now let's take the fourth scenario wherein only short-term capital gains from sale of land is concerned. Now, as far as short-term capital gain from capital assets, transfer of capital assets, other than what is provided under section 111A is concerned, there is no specific provisions in the Act, as I said. So that means the normal provisions of the Act, the normal slab rate will apply. So 5 lakh, whether chapter 6A deduction is allowed or not, yes, of course it is allowed in case of old regime. And why it is allowed in case of old regime? Because there is no specific disallowance and it is anyways being treated like any other normal income. Basic exemption limit, yes, again it is allowed. Why it is allowed? Because there is no specific disallowance anywhere. Here I have by mistake mentioned under section 111A. Should be, it's wrong. Because it's slab rates that we are applying. Just ignore this. Now comes the rebate under 87A. Now again, as far as the old regime is concerned, the rebate is allowed. In the new regime also, there is no disallowance anywhere in 87A. There is no specific provision providing for rates of tax in this case. So no question of specific treatment. The new regime also 115 BAC subsection 2 also doesn't disallow this. So that means it is allowed. Now the fifth scenario where only long-term capital gains from equity share is there. Now, like you had 111A for short-term capital gain from three specific capital assets. Similarly, we have provision for rates in case of long-term capital gains from the same three specific capital assets, which is 112A. So there is a transfer of long-term capital asset, equity shares, out of which long-term capital gain is there for the assessee is 5 lakhs in both cases. The first question is whether chapter 6A deduction is allowed. In case of old regime, till now we have seen that chapter 6A deductions were allowed. Yes. In case of salary, chapter 6A deduction was allowed. In case of capital gains, short-term capital gains falling under 101A, it was not allowed. In case of capital gains from sale of land, it was allowed. Now comes capital gains from equity share. So as I mentioned, this is covered under 112A. Wherever there is a specific provision with respect to short-term capital gain or a long-term capital gain, the precedent has been in the provision. Chapter 6A deduction was not allowed, is not allowed. So the same is the case here as well. We'll read out that specific section now. 112A. Subsection 5, where the gross total income of an assessee includes long-term capital gains referred to in subsection 1, the deduction under chapter 6A shall be allowed from the gross total income as reduced by such capital gain. So only from the gross total income which remains after the reduction of capital gain, chapter 6A deduction will be allowed. That means that if one has only capital gains as income, chapter 6A deduction cannot be taken. So in this case, we had only long-term capital gain. There is no other income to set this off, so it is not allowed. Now, in long-term capital gain, which falls within the ambit of 112A, there is a separate exemption of 1,25,000 which is allowed. So any long-term capital gain under this section over and above 1,25,000 alone can be taxed. The question is, if this exemption is anyways available, can the assessee also avail the basic exemption limit of 2,50,000 and 3 lakhs? The answer to this is yes. Again, the reason, because there is no specific provision debarring. So both are allowed. So taxable total income becomes 1,25,000. Tax at the rate of 12.5%. Rebate under 87A is nil. Why again? Yes. Why rebate is nil? Here again, there is a specific provision 112(1)(a) subsection 6, which specifically disallows 87A rebate. Let's go and read that. Where the total income of an assessee includes any long-term capital gains referred to in subsection 1, the rebate under 87A shall be allowed from the income tax on the total income as reduced by tax payable on such capital gain. So the rebate is allowed only with respect to the tax which is calculated on the remaining total income other than the capital gains. But here there is no remaining total income, there is only capital gains. And that's the reason why rebate is not allowed. Now this is a classic case where the rebate is disallowed because it is specifically mentioned in 112A. That means wherever the original intention of the legislature was to not offer the 87A rebate in any case, they had specifically provided for in the provision itself, in the section itself. In other sections like 101A or 101, it is not specifically provided, and that's the reason why we took the rebate there. Right, so the rebate under 87A is nil in both cases. Now let's see a scenario wherein there is only long-term capital gain from land. Now again, if there is only land, if there is a long-term capital gain from land, it is covered under section 112(1). Now 112(1), as I said, is the residual section for all other cases of long-term capital gain which are not covered under 112A. Let's see whether chapter 6A deduction is allowed here or not. 112(1). Subsection 2 says that where the gross total income of an assessee includes any income arising from the transfer of long-term capital asset, the gross total income shall be reduced by the amount of such income, and the deduction under chapter 6A shall be allowed as if the gross total income as so reduced where gross total income of the assessee. So this basically says that the availability of chapter 6A is only to the income other than the capital gains. That means if one has to avail this, the assessee should have other income as well, and the deduction will be allowed from the other income, not from the capital gain. So here there is no other income, so we are not allowing 6A. New regime, we know it is not allowed anyways. Total income is 5 lakhs. Is the 1,25,000 of basic exemption under 112A applied here? No, it is not applied because it is only for that section. Basic exemption limit applied? Yes, it is applied. We discussed it all this while. Whether the rebate will be allowed. So all this while you must have realized that if something is to be disallowed, it is specifically provided in the act, in the provision itself. Like in 112A, we saw the rebate was disallowed here because 112A 1A subsection 6 specially provides for it. Let's read section 112. Just you need to ignore this 112A which is mentioned here. It's a misprint. Let's read 112. So the 100, you can read this at your leisure, but I'll just give you the gist of this section. This section allows basic exemption limit specifically here. It also allows disallows the chapter 6A deduction. So whatever had to be allowed or disallowed, it is provided specifically in this section. There is no mention of 87A disallowance here. So this means that 87A is allowed in this case, both for old and the new tax regime. So the tax liability comes to 19,500. Now let's see the last scenario wherein you have salary, house property, long-term capital gain from land. Gross total income is 5 lakh, gross salary. We all know the standard deduction will be allowed. So income from salary is 4 lakh 50 and 4 lakh 25. Then we have income from house property. Because it is a self-occupied property, it will be nil. And then you have interest under section 24, 2 lakhs, which is deducted in case of old regime. In case of new regime, it is not deducted because in the new regime, section 115 BAC subsection 2 specifically provides that the interest under section 24 for loan from house property will not be allowed. So like chapter 6A deduction, this interest is also not allowed in case of new regime. And that's the reason why we have not considered it here. So gross total income without capital gain is now 2,50,000, 4,25,000. Now comes capital gains. You have 5 lakh of capital gains. Let's see whether chapter 6A deduction is allowed or not. In case of old regime, you have 2 lakh which is allowed as deduction. The reason why this is allowed as deduction is because we have income, gross total income without capital gain of 2,50,000. So from this 2,50,000, you get a deduction of chapter 6A. So the balance total income without capital gains is now 50,000. The total income with capital gain becomes 5,50,000. The basic exemption limit as per the tax slab is 2,50,000. What is the excess of basic exemption limit over total income without capital gains? So the total of income without capital gains, we saw it was 50,000. So the excess of basic exemption limit over and above that is 2,50,000. This 2,50,000 will get reduced from 5 lakh, which is the capital gains. So this is how the basic exemption limit is applied to capital gains. Now let us see in case of new tax regime. We did it till here. 4,25,000 is the gross total income without capital gains. You have capital gains of 5 lakh. Is chapter 6A deduction allowed? No, it is not allowed. We all know because it is new regime. 115 BAC subsection 2 doesn't allow. What is the total income without tax, without capital gain? It is 4,25,000. We saw that it is 4,20,000. It will remain 4,25,000 because there is no deduction allowed there. Total income with capital gain becomes 9,25,000. Basic exemption limit is 3 lakhs. Is there any excess of basic exemption limit over total income without capital gains? Well, the total income without capital gains is 4,25,000. So the total income is more than the basic exemption limit and not vice versa. So the basic exemption limit of 3 lakh will get deducted from this 4,25,000. What remains is 1,25,000. This 1,25,000 plus 5 lakh of long-term capital gain is the total income. However, we know that under section 112(1), because this is a capital gain under section 112(1), the tax rate that needs to be applied to capital gains is 12.5%. So 12.5% of 1,25,000 is 6,250, and for the remaining it is the normal tax. Sorry, 12.5% will be applied on 5 lakhs, which is the capital gains, and on 1,25,000 the normal tax slab will apply, which in this case is 5% of 1,25,000, which is 6,250, and 12.5% of 5 lakh is 62,500. In old regime, there is no normal tax slab applied because it is nil. LTCG is 3 lakh. 12% of 12.5 of LTCG is 37,500. Whether rebate is allowed or not, as I said, rebate is for the total income. Here the total income, which is the sum total of capital gains, house property and salary, on that whatever tax liability comes, which is 37,500, here a rebate of 12,500 can be availed. Same is for the case in the new tax regime. Right. So with this we come to an end. I have covered broadly the major scenarios, and as I said in the beginning, this is just an opinion. If you have to find your tax liability, you must approach a tax professional. Income tax, especially when there are capital gains involved and when there are multiple sources of income, and these sources of income has accrued and arisen over a period of time during the previous year at different times. There can be different rates depending on the time when it has arisen also. So you must approach your tax professional and not just go by my opinion in this video. Thank you so much. If you have any queries, please write to me. I'll be glad to take them on LinkedIn or on YouTube. Thank you so much.